go again with another of our Evolution Consulting market updates. This one being recorded on the 14th of June, just after market close. And to be fair, I know we haven't done one of these in a while because obviously we've been relocating and slowly but surely packing everything up and getting ready for the big move. But nonetheless, we wanted to get one more of these out there before we shut everything down and rolled out, so to speak. But to be fair, we did record one of these on the 8th. But guys, I try to keep them current. I didn't publish that one because I try to keep them current given the speed of information, the speed the market moves at, and speed of news. But to our credit, and it does us no good because, like I said, we're not going to publish that video. We did recommend Smith & Wesson and Strum Ruger in that one. We may have mentioned it on Twitter, so you can check that out. But since then, given the events that happened in Orlando and more recently today again in Texas, we can say that we have been proven 100% correct, guys. I hate to say, but since even 2014 when we were doing the alt news stuff, we were saying that the frequency and the intensity of those events, or those types of events, we should say, was going to continue to increase. And we have since been proven correct, not the least of which in the wake of, by the way, for those of you that read Wirehouse and those, again, that follow on Twitter and read the commentary articles, this is nothing new to you. We mentioned that, as a result, the gun sales were going to continue to increase, and gun sales, Smith & Wesson and Ruger, I think last quarter had kind of a lackluster quarter. They said that, the background checks and such were down, and it's really our analysis of that was they've had so many record-setting quarters that last quarter was just sort of almost like either a natural business cycle or a normal, but nonetheless, guys, surprise, surprise, based upon our forecasting information, Strum Ruger, Smith & Wesson, Taser's not going to be so much affected by that, but certainly Strum Ruger and which is RGR, and Smith & Wesson, SWHC, Smith & Wesson Holding Corp. Those are stocks that the day following it, the day following the events in Orlando, they were up like 10% each or 7% each, which is something ridiculous like that. And we were kind of going like, why don't we publish that video? Just because we kind of knew, we just had a lot of information indicating that there was going to be, more of those types of events. We had a lot of information indicating that, gun sales were going to pick up again. I'm sorry, guys, I didn't get a chance to edit it in time, and I don't like to publish old material again because the whole point of these types of market updates is so that you guys can be actionable. That's number one. So as far as current entry points, guys, even with the pop, and there's a little bit of a pullback today, current entry points on Smith & Wesson and Strum Ruger, okay, those are still looking real good. Those stocks have a lot of room to go, especially as we get closer to the election. We've said it once before, we'll say it again. Election years do tend to be very good for firearm sales, and it's been proven historically. For when Obama got elected, the sales spike in guns was like, it was just completely ridiculous. I think we did another video that's got that. Matter of fact, the first time we mentioned Smith & Wesson, we put a graphic up of gun sales year on year, and just the year Obama got elected, both years as a matter of fact, both elections, they just went through the ceiling. And now we got a combination of patriotism, okay, the right wing, I call it the hacksaw Jim Duggan effect, kind of sarcastically, but we have the right wing wanting to go out and buy more guns pending the kind of Islamic terror, or whatever you want to call it, that narrative. And then you have also the thought now, especially in the wakes of shootings like that, and we've spoken in detail about is there anything really 10 years ago that you could want to buy in terms of firearms that you can't? And of course, as we forecasted, what a surprise, is another AR-15. And so, guys, just to point this out, we did not mention it once in any of the other videos that we did, but for those that do know firearms, okay, as far as calibers and the ones that are most desirable, if there is, okay, and there isn't going to be, but on the off chance that there is any meaningful legislation passed in terms of an AR-15, banning AR-15s or certain variants of the AR-15 or whatever. Now, it's not going to happen, but on the off chance that it does, okay, and given the fact that guys that do go out and purchase those types of firearms, they're kind of thinking in advance as far as can I get accessories and parts and upgrades or whatever, the number one beneficiary of that type of legislation is going to be Strum Ruger, specifically because of one product that they produce called the Mini 14 or the M14, which, believe it or not, is a variant of the service rifle that came before the M16. For those that know your Vietnam history, the M14 or the Mini 14 was replaced by the M16. Now, back in the day, the M14 was .308 caliber. Now, the Mini 14, the very popular version, fires the same round, the same cartridge that the AR-15 does, which is 5.56 by 4.5 NATO standard long rifle round. And the Mini 14 does now as well. So that's, you got to remember, guys stockpile that kind of ammo. Guys that are into that kind of stuff stockpile 223 or 223 caliber ammo like it's going out of style. So that's the next most compatible similar weapon. It can have a 30-round magazine. It can have all the upgrades and parts. I mean, it doesn't look, you can make one look nothing like the original Mini 14. So just in point of fact, guys, from a purely business and investment perspective, I would get, if I had to pick one between Smith & Wesson and Ruger, if I was only going to take one position, guys, I would be heavily into that Ruger play. Not to say that the Smith & Wesson play is not a good one, but just given some of the factors and some of the linguistics that we've seen, we're going to say, double thumbs up, okay, to Strum Ruger. They're going to be posting some pretty solid quarters based upon our analysis. So that's that being said, and it was really wild, guys. Like I said, I mean, it's just, we've said, I mean, a lot of the macro, longer-term, over-the-horizon stuff that we forecast, and this goes as far back as 2014, when I was doing this stuff under an alias, just for the purposes of I have no idea if the system that we built is going to work, as well as just really not wanting to be bothered. All right, but nonetheless, a lot of the stuff that we forecasted even as far back as then is starting to kind of show up, showing long-term trend of success. So that's kind of important to us. All right, so that's just another level of verification, and I tend to be the most difficult critic on the planet of the system that we built, because for me it's nothing short of perfection will do. So that brings us to tomorrow, when the Fed meeting happens, and they announce that they don't hike interest rates again. So as you might imagine, in our simulated portfolio, which has been kind of a rough experience first go round, but that is why we do it on a simulator. As we say, if you're going to crash and burn, you might as well do it on a simulator. All right, so, but a failure, that experiment, our 30-day trading experiment, high frequency I'm referring to, a failure certainly was not, because the amount of information that we've gotten from that 30-day trading, that intraday trading experiment that we've done, and again, we don't encourage the folks that listen to the evolution stuff to go out and day trade, okay? We're encouraging the 30, 60, 90-day convert paper into more paper into metals. That we've been phenomenally successful at, and we like to think that those that listen to our stuff have been phenomenally successful at it too, but we're certainly not by any means saying, go kamikaze day trade, which is exactly what we did. All right, we basically been, straight up kamikaze, one position, all in, just to really calibrate the system that we built to the speed of the market. And while numerically, dollars and cents wise, the results have been like, we've been up 30%. I mean, we've been down damn near 50% at this point. Now we're on our way back up again, but we only got a day or two left for round one of this experiment. What we've discovered, guys, is that some of the big bank algos that are out there, and some of the black box office, some of the really contemporary stuff that we do have variants of to test, all right, are going to have one hell of an effect to the market once things really start to get wild. Okay, that's a fact. The amount of information that we've gotten just in the intraday trading stuff it's been awesome. And we're actually going to be publishing a Grant Street Notes guide specifically on intraday and high-frequency trading. Again, it's not the kind of stuff that we encourage. We're not going to make any specific equity recommendations in that guide, but what we are going to do is kind of illustrate the effects of HFT, because yours truly has been sitting here with and we're all running off one system now, okay, because we're pretty much, packed up and ready to rock and roll. So it was really kind of a worst case, or as close to a worst case scenario as we dare get in terms of running system resources, and it's just to see how little resources a system like this can have and still function. So we got that out of the way. We got and we got a hell of a lot of information as far as how the market's been moving and trading, and the speed of information and all that stuff. So it was truly a Thomas Edison kind of experience, where we haven't failed. We've just found 10,000 ways that don't work, and almost intentionally so. But we do have the Fed meeting tomorrow, so when the Fed doesn't come out and hike rates, for those of you that are long JNUG and NUGT and all that good stuff, don't forget to take some off the top on the initial run-up, and go to your coin shop and buy more metal. As far as a rate hike goes, guys, it's looking like a 0% chance, or close enough to 0% chance tomorrow. It's not even worth talking about. July, we're not sure. July, we're going to do a little bit of linguistic research to see if we can see any indication of a Fed rate hike in July. And the reason I say that is, as such, based upon the last Fed meeting in, where was that, Philadelphia. First of all, I try to keep these as clean as I possibly can, okay? I try to save the more colorful language from the show that we're going to do. It's called The Nuclear Option. We call it the Anti-Alternative News Show. But I try to keep these as clean as possible. But, I mean, pending that Philadelphia Fed meeting, I have no fucking idea what that was. I just, watching Yellen come out and read that stuff off was just like, I said, matter of fact, I said it to the EA. I go, it looks like a third grader that wrote a book report, or that was reading a book report that they didn't write. They know they didn't write it, and the rest of the class knows damn well they didn't write it. I mean, it was just the most laughable thing I've ever seen in my life. And I said, that was really kind of horrible. And I could tell you, just based upon our analysis, is that Janet got fired. Janet's history. Okay, if anything, maybe a rate hike in July, but probably not. If so, it's going to be probably by a new Fed chairperson. Now, that may sound kind of outrageous and ridiculous, but I don't think she's going to make it to the end of the Obama term. I think she's done. I think the big banks have had it with their nonsense. I think the major hedge fund players, the investment side players, have had it with their nonsense. And when they get sick of a Fed chairperson, their days suddenly become very numbered. And I think she's just finally, because what's happening, guys, is something that hasn't been really spoken of directly in mainstream media yet. Okay, but there has certainly been hints at it, and there has been plenty. I mean, the response that she got from that Fed meeting, by the way, was not friendly. Okay, even on the major mainstream networks that are usually just kind of, what she got was absolutely. I mean, she got an ass beaten on CNBC. She got an ass beaten on Bloomberg. They had it with her. They were just like, what in the hell was that? I mean, I kind of had the same reaction. I think anybody that has any fundamental economic understanding kind of watched what happened there and just went, what the hell was that? Right? So, that being said, she got a serious beatdown on the major networks, and based upon what I've seen is we're heading towards something, guys, that I'm gonna I guess maybe I can coin the phrase if I have no idea. Maybe it's been used before, but I said a new hashtag that Twitter certainly needs is Fed irrelevance, and that is really what has happened to the Federal Reserve, guys. Is that this cycle of, and I've talked about it a million times, but the cycle of threaten to raise rates, don't raise rates, economic stimulus, gold goes higher, threaten to raise rates, don't, this cycle, the stack loop, it's over. Okay, you can only do that so many times. First time it had an effect. Second time it sort of had an effect. Third time, now it's just like, first of all, I have to say Mr. Sereni, our chart guru, as he were known, really said it best, and sometimes, as I've so often said, there is something to be said for presentation style, and what he basically said was, Nick, he goes, even if they do raise rates another 2-5 basis points, what real meaningful fundamental effect is it going to have? Yeah, there's going to be that instant knee-jerk reaction, right, of, dollar strong, and go out and buy, or sell off gold. There's going to be all the reactions that we've come to know and love based upon Fed news, but that tapers off and peters off so fast. Okay, because at the end of the day, the way he phrased it to me, he goes, Nick, you got to understand something. He goes, that's like a quarter turn on a valve bolt on a fire hydrant that's been open for a week. We've had zero interest rate policy effectively for 10 years. All right, is 0.5 basis points? Okay, I'm sorry, 0.50 basis points, does that really make a difference? Banks are still effectively borrowing at zero, lending at higher rates. They're paying next to nothing on their savings account. They're paying next to nothing on a money market account, right? So at the end of the day, who really cares? What long-term, real, underlying, fundamental effect is that going to have? Okay, maybe you get one more cycle like this on metals out of it. And I got news for you. I mean, based upon what I've seen, as you can see, we were proven correct, by the way, in terms of what the Shanghai Gold Exchange has done. And what the Shanghai Gold Exchange did is, the only reason that dip in metals, which admittedly we didn't foresee all the way down to 12 and very, very, very low change, we didn't foresee it going that low, but I mean the rebound was right back up to those 1270, 1280 levels like we forecasted, and we said once it's got that momentum on the upside, look for gold to go right through 1300. A no interest rate hike is probably going to put it closer to 1375, 1380, which is, as we forecasted, the next so-called new normal level high for gold. All right, you'll notice we didn't mention silver on that because, guys, to be honest with you, we haven't done the research. Okay, and if we don't know, we say we don't know, and in that instance, we don't know. So, but in terms of gold, look out. Here it comes. Okay, so that's something else we wanted to get out of the way. I mean, maybe if there's no rate hike in July, guys, if anything, it's going to be by a new Fed chairperson. That is a far more plausible than them just letting Janet go on, licking the window and slapping her ear, so to speak. It's been some of this. And like I said, I try to keep these clean and I try to keep these very professional. But there comes a point where even I have to say something where it's just like, what are you doing? But that being said, guys, wanted to get that out of the way. For those of you that are not long the metals positions, JNUG, NUGT, Barrick's Gold, Newmont, NEM, all those, the ones that we've been talking about throughout these market updates. For those of you that are not long those ETF, and I'm going to include USLV and SLVP in that as well. If you're not long those, guys, you can even just grab, even if you don't want to do 30, 60, 90, excuse me, you can get long those and just catch the run up off of the no rate hike. So that would be a fair course of action there. In terms of, I almost forgot to mention, for those of you that bought the Bitcoin podcast that we recorded about 2 months ago, you're welcome. As Bitcoin now is starting to head up towards like the $700 level. In Wirehouse, I may have mentioned it in one of these market update pieces, and certainly in that the 1 hour audio format Bitcoin podcast, I mentioned something about the fact that Bitcoin, as currency becomes more unstable, is a way to short the entire currency market. Okay, it almost acts as, and somebody said it on Twitter today, it almost acts as a VIX, volatility index for currency stability, and you can thank the Japanese yen for that. All right, so that's number one. Number two, the tulip bulb in Amsterdam effect has officially begun, guys. Get ready. It is tulip mania time. And for those of you that are not familiar with the tulip bulbs in Amsterdam, please do Google that. It is one of the glaring examples of what happens when there's excessive speculation on any commodity or anything for that matter. You get what's called a tulip bulb in Amsterdam effect, and that's where hype feeds hype, fuels hype, feeds hype, fuels hype. And you get that kind of upside momentum, guys. Heads up. I said, I'm not a fan of Bitcoin. I don't particularly care for Bitcoin as anything other than exactly what it's being used for right now, which is apparently a way to launder money or transfer wealth from one point to another. So, by the way, in case you're wondering why the reason Bitcoin has been allowed to kind of carry on, it's the wealthier using it too. All right, that's number one. Number two. I said that there was going to be that tulip bulbs in Amsterdam effect, or that tulip mania effect, and it's starting now. So for those of you that did buy that podcast, good deal if you bought some Bitcoins. Yes, I really just said that. But good deal if you bought some Bitcoins. You just got to look at them. Don't look at them like a currency. Look at it like a speculation. It's just like buying any other equity, okay? Because I got news for you. Bitcoin's going the way of Pogs and silly bands and beanie babies, all right? But in the short term, through the global economic reset and through all the financial mayhem that's coming, Bitcoin is going to probably do fairly well. Especially, you talk about the Brexit and Eurodollar, being brought into question, whether or not the Eurodollar is going to remain the Eurodollar, it's going to remain stable. So there's plenty of reasons for alternative currency or temporary alternative currencies to go higher. So hopefully, guys, this stuff has been helpful. This is about 20 minutes. This is the last one of these we're doing before we get out of here. I know I said that on the last one, but the reason I wanted to include this is because, again, the markets are moving so fast. I hope you guys are making money along with this. Like I said, it's one thing to be idealistic and ideological and jump up and down and rah-rah and saber rattle and all that nonsense, guys. And then it's another thing to do what we're doing, which is sit back, relax, let the idiots kill each other and make a buck. Really, that's what it comes down to. And that's really, to me, the dividing mindset between, those that are going to prosper through this whole experience and those that are not. So that being said, guys, again, hope you are enjoying these. All right, as again, I am enjoying making those. If you have any questions, comments, bitches, moans, gripes, or complaints, don't bother sending along the bitches, moans, gripes, and complaints because I just don't care. But, okay, if you do want to have, if you have any equities that you'd like to see researched, if you have any ideas, comments, constructive feedback, constructive criticism, or again, of course, if you have stuff that you want to see researched, by all means, info@evolutionconsulting.world. It should be somewhere over in this general region over here. And if you want the day-to-day stuff, we still do try to post pretty frequently on Twitter. It's kind of our source of instant gratification. You can follow us at evo_consultants. It's evo_consultants. All right, hop on Twitter and take a look there. But guys, again, we are out of here. All right, so we'll next one of these. There should be the background will be very different, and we'll be in our snazzy new place. So again, guys, be good. Everything's a transaction.